I'm in Toronto now with Damon Sutherland, who is the Senior Vice President of our private client, Assante Private Client, which is managing about $25 billion. And this is a multi-manager portfolio that is constantly being balanced for the right asset allocation mix that the clients want. There's a shift going on in the world, and certainly in the financial services industry, towards a more environmental, social, and governance way of picking stocks, of picking companies. And I wanted to ask Damon today to talk about just that shift that's going on here at CI and Assante, and to elaborate a little bit more on private client and how successful it is. And one last thing, we won the J.D. Power Customer Year Satisfaction Year Award of the Year. How come? What have we been doing right, Damon?
I mean, listen, it's not what we're doing right, it's what our advisors are doing right, and it's what clients see in the value that our advisors are bringing to the client relationship. So it was certainly a great award to receive, one that we were very excited about, but it's not about us, it's about our advisors and the value that our clients are seeing in our advisors as well.
Right. So can you comment on what the main objectives are with the various portfolios? Like, if I have, say, $1 million, well, let's say $2 million. Why script? If I have $2 million cash with the markets the way they are right now, what would make sense? What would private client do with that $2 million?
Yeah, I mean, listen, what we would do is we would first assess a client's goals, we would assess the client's risk tolerance, we would assess the client's risk capacity, and we would build a custom portfolio for the client based on those parameters. We go through an investment policy questionnaire process, we go through an investment policy statement delivery, and that creates the roadmap for our clients as to the portfolio they should be invested in based on their goals and objectives. To your point, we have seen markets significantly increase over the past year and a half, and really over the past 6 or 7 years, markets have been pretty good with some volatility along the way. So we want to make sure that we custom build that portfolio, as I said, for our clients' goals and objectives, taking into account what's happening in markets today. Sure. So we might not put all of that $2 million to work tomorrow. We might invest that $2 million over time. Sure.
Dollar cost average.
Correct. Dollar cost average. And get the client into the market over a period of time that we see acceptable. Nice. So it's a bespoke custom approach based on the client's situation, their risk tolerance, their goals, and then making that roadmap for the client and making them feel comfortable as we invest those dollars over time.
Right. And on average, I've noticed with a, say, 20% fixed income, 80% equity portfolio, we're getting an average of about 8 to 9% on average, which my clients are very happy with. But, I think we're discounting private client a bit because it's not just how well we manage the investments, but then we also bring in the financial planning. Can you elaborate a bit on the experts that you guys bring to the table for serious financial planning for clients?
Yeah, I mean, I think that's an incredibly important point. When you think about investment management and you think about a rate of return, that can be delivered through many different vehicles. It can be delivered through a stock or a bond or a mutual fund or a private pool that we use to construct our portfolios. But investment management is becoming more and more commoditized throughout the industry. To your point, and I'm biased, but our secret weapon is the depth of our wealth planning expertise. And we partner with our Assante advisors from across the country to deliver that.
Yeah, you do.
And when you think about the team that we have, it is almost 100 experts across the country, whether it's accountants, lawyers, certified financial planners, that assist in the delivery of our wealth planning, our risk management, our insurance-based, our estate planning, and it really is our differentiator and our value add over and above the sound investment management that we do provide, as I described, from an onboarding perspective.
Absolutely, yeah, because we have clients that have fairly complex needs. Business owners, for example, I've got one client who created some nursing homes in England, and most of his corporation was listed in the Cayman Islands, and now he's got about $5 million that he wants to bring into Canada, but he'll get hammered on the taxes. So our tax specialists are helping him and his accountant figure out the best way of bringing it in to minimize the tax hit. And he's really happy with the service that we're doing, and that's just included in the portfolio.
Absolutely.
Which is a real bonus.
It is, and when you speak to high net worth clients and ultra high net worth clients, don't lose my money.
Right.
Preservation of capital is top
Absolutely.
of mind.
Yeah.
And how can you help me save on tax? To your point,
Absolutely.
there's very complex clients that we deal with. To your point, business owners who have a number of companies, who have a lot of moving parts within their lives, and how do we simplify what we do for those clients to preserve capital, to grow wealth over time, and to save clients on tax, both while living and upon death.
Yeah, yeah. And even with the estate planning as well, which is getting to be a real issue, a positive issue certainly for our industry, with the amount of trillions of dollars being passed on to the next generation. How do you do it in a tax efficient manner that makes sense for the next generation and for the parents?
And that's a very important point, and something that our team is helping our advisors and clients with in the private client space is intergenerational wealth planning, making sure that we are creating good inheritors, and making sure that we're structuring affairs properly as money passes from one generation to the next. It's done in a efficient manner.
Yeah.
And it's a conversation that more advisors are having with multi-generations, doing family meetings with our private client team, engaging in those challenging conversations today to make sure that as that money does change hands from generation to generation, it's done in the most tax efficient manner, but also, as I mentioned earlier, making good inheritors, educating the next generation, and making sure that from G1 to G2 to G3, that money is maintained and not spent or lost or, for lack of a better term, blown. Yeah,
because usually you look at the third generation that inherits wealth and they've squandered it. So the education is critical. Can you comment a little bit more on what some advisors would do? I know I do some intergenerational training and things like that, and in my website that we're now on, called Live Beyond Wealth, it goes into that financial, behavioral education, so that people understand where money fits in their life and where it doesn't. Can you comment a bit on some of the things that we've done with private client, or some advisors out there have done?
Yeah, absolutely. I mean, I think it's, as I mentioned earlier, it's important to just start the conversation. We've seen way too many scenarios where you have a will that's written by G1, the first generation, and none of the details are discussed with the children or the spouses or the inheritors. And we've seen families, unfortunately, absolutely, we've seen families unfortunately torn apart when the first generation passes away and the will is read and the details are delivered, and Matt isn't getting any money and Damon is getting all of it. And we're brothers.
Okay, so wait, hold on. How is it in this scenario that you get all the money and I get nothing? I won't stand for that stuff.
Absolutely right. And those are the unfortunate conversations that fall out of planning if it's not done properly. Right. So it's as easy in our world to have those challenging conversations in advance, and you don't necessarily have to disclose every detail in terms of dollars, but maybe you have a conversation around structure. Maybe you have a conversation around why the structure is what it is.
Right.
And you explain that to all those that are going to be inheritors, and then you start the education process, to your point, so the second generation doesn't spend it all and the third generation is left with nothing.
Yeah, and they're not sideswiped, so let's put that mindfully, let's put everything on the table and let's be open and honest about it. And at least the kids get to ask dad or mom, why are you doing this, right? Versus hiring a lawyer and then suing their siblings to find out why dad did it.
Absolutely.
It just doesn't make sense.
Absolutely.
So I just want to shift the conversation now to climate change, to just the trend that's going on in our industry towards environmental, social, and governance as criteria that our portfolio managers are using to pick the right companies that are doing the right things to become more carbon neutral. Can you comment on what GAM is doing on that level?
Yeah, absolutely. I mean, it's a significant focus of ours, and it's interesting when you think back, call it 3 or 4 years ago. These conversations were just starting as it relates to conversations between our clients and our advisors and our CI Global Asset Management business. And in my experience, it was much more prevalent on the West Coast, in British Columbia, and today those conversations are happening from coast to coast. We have high net worth clients in Halifax all the way to Vancouver that are asking what we're doing from an environmental, social, and governance perspective. So it's just a little background as to where those conversations are coming from in today's world relative to where they were. From a CI/GAM perspective, it is a major focus of ours. We've hired a portfolio manager who is solely dedicated to overseeing all of our ESG investment strategy. Over the last 6 to 8 months, we've integrated a number of investment boutiques into one global asset management firm. And that's allowed us to drive a lot of the analysis to be done at the portfolio level to make sure that our portfolio managers are adhering to the criteria that we set out for all of our funds and pools and investments based on those ESG qualifications.
Perfect. Yeah, because in my practice, obviously began in Vancouver, I've been in on, I think for the last 7 years, shifting clients away from oil and gas. Never had munitions, never had any of the other usual suspects. And it's 100%. My clients are now, and actually even the new clients are coming in and saying, okay, I've got kids, I've got grandkids, I'm worried about climate change and what's happening. And I want to make sure that my portfolio is helping. And the nice thing I've noticed, Damon, perhaps you can comment on it, is that it used to be people would give up a little bit, or they thought they were giving up returns to do the right thing. And now it's like, no, do the right thing, invest in the right things, and you'll still make money. And matter of fact, you'll probably do even better than some of the older sectors that are going to have challenges.
For sure.
Can you comment on
that?
that?
Yeah, and we've seen that. I mean, we've done the analysis, and if I take a step back from a product development perspective, we have an entire suite of ESG solutions now. And to your question on what CI/GAM is doing from a focus perspective is not only as it relates to portfolio management, but also on the product development side. So very recently we launched a climate change fund that is run by Monroe Partners, Nick Griffin out of Australia. They're very big believers in this overall thematic change and investing in climate change leaders that, to your point, are going to perform well, but are also going to have a positive impact.
Yeah.
So it is, when you do the analysis, it is interesting to see that was the mindset, I think, a number of years ago, in that, you know what, we can invest and make a difference, but it might impact our rate of return and our retirement goals. Now the reality is, when you look at the research and you look at the performance of these portfolios, performance is actually stronger in many cases, and you're having that positive impact.
Absolutely. Yeah, no, obviously as a human race, we need to clean up our act and clean up the planet. And on that note, thank you so much, David, for chatting with us.
Absolutely. Thanks, Matt.
Yeah, my pleasure.